following is a paid program sponsored by the Finance Hour.
Let's get back to the Finance Hour. Empowering you up is James Plevick and Michael Garrity on CP24 Radio 1050.
Welcome back to the Finance Hour. I'm Michael Garrity, the new co-host on the Finance Hour for this season. Joining me in studio is James Plevick and Ian Cunningham, the Chief Marketing Officer for Capital One. Ian, just before the break, we were talking about an escalating rate environment. So rates are getting higher over time. What do consumers who have credit products need to be thinking about in an escalating rate environment?
Yeah, we are in an interesting environment in Canada where around the world rates remain low, but we've fared better than most as a country, and we're starting to see the central bank raise those rates up. It's people, I'm going to speak more to credit cards because that's kind of our area of expertise. I think people need to understand the structure of their products. So are they fixed or are they prime plus type rates? And obviously, if it's prime plus and rates are rising, your monthly interest rate is going to go up. And you really need to understand how much you can afford to borrow. Now, in the greater context of products, it's probably in mortgages where it's a lot more impactful where people are on prime plus type rates and the rates are going up. And it's really understanding what your ability to carry debt is and making sure that if you do have any issues as those payments go up, that you visit your financial institution to talk to them.
Good, very good.
That's great.
We've got a caller.
Fantastic.
It's John. John, are you out there? How's it going, John? Yep. Great question. Great, especially with the school season just beginning. Ian, go ahead.
Definitely from the credit card standpoint, first and foremost, pay the bills on time, right? At a young age, it is great to establish a great credit score, and irregardless of income, people have a credit score that's not tied to that. So all you do, you pay your bills on time, you make sure that your monthly information is correct, and if you ever run into troubles, the best thing to do is pick up that phone and talk to the financial institution. But the best advice I can give for your son is, we all went to university and have fun. It's sometimes easy to run up some debts on those cards. Try not to do that. Be very disciplined, because this is a measurement or a history, or your payment history will follow you wherever you go. So I would just encourage him to make sure he pays it monthly and tries to not maintain a balance on the card.
Great. There you go. And make sure that he has maybe some kind of a part-time or full-time job, or you're giving him some allowance to make sure that he can actually pay that off, because that would help.
Well, I think that's a great segue for us to talk about some of the basics of the credit score, which is this week's issue. James?
John, is that good? Okay. No, it does not. No, it does not. But what we're saying is, if he's going to have a credit card, it'd be best to, and this is all starting kids off in the proper way. And if they have some kind of a part-time job, or if they have some chores that they should be doing, they need to understand if they're going to be having a credit card, these chores need to be done so they can actually have some income and learn some discipline to start paying off these credit cards. Because later on in life, if they just let them go, because we're going to get into that, people think, oh, it's not a problem, I'll just let my payment go and I'll miss it this month or whatever. That would be the worst thing that he could possibly do at the early stage of anyone's career in starting a credit, just plain old credit.
Yeah, I think John raises a great question, though. Maybe before we get into credit scores, why don't we talk about what the credit report contains? Because I think a lot of people probably aren't aware of that as well.
Yeah.
So, hey, John, I don't know if you're still on the line or listening, but I'll go through it. It's personal information, so name, current addresses, social insurance number, telephone numbers. There's credit information, so that's any type of loans or lending that you've done over the course of your life. Banking information, so it could include accounts you have and any, if there's ever been NSF checks or any bad checks that have written, they show up on a credit report. There's public records, so anytime if anyone's been sued or there's been a court judgment against you, that can show up on the credit report. Collection information, if anyone's debt has ever gone into collection because they have not paid a debt back, that'll show up on a credit report. Consumer statement, that's a statement that you've made to explain a particular situation, such as a dispute. So if there's been something wrong and you dispute that, that'll show up on, which is a positive more if somebody's gone in to correct a fallacy on the credit report. And any inquiries, which this is an important one, is every time somebody goes and applies for credit, wherever they do it, at a bank, at Capital One, anywhere else, an inquiry shows up on a credit report, and that can often be misread or read as, wow, that person's out there applying to a lot of places for credit. Maybe they need credit, and maybe that's a higher risk factor.
That also lowers the score a little bit every time there's an inquiry.
It's one of those factors that contributes to overall credit score, yes.
Right. So, which could be a good segue. John, is that good? You're welcome. Thank you for calling in. With regards to that in the credit score, I mean, people need to understand that they should know what their credit score is, period. And you should do that at least a minimum of once a year.
So why don't we talk about that? Because most people
Yes.
have no idea how they would even find their
Yes.
credit score. So, Ian, again, back to you. What advice would you give to folks who have no idea today what their credit score is and want to find out what their credit score is? What would you suggest to them?
There's two credit agencies in Canada that everybody can contact. First is TransUnion, which I believe is www.transunion.ca, and then there is Equifax, which is the second credit agency, and they're basically the two in Canada, and they basically track all payment history. So all lenders, such as ourselves and all the banks, will report all credit type transactions, and that's what feeds into the credit reports that both Equifax and TransUnion create. From that information is built a credit score. It's called a FICO score because it was created by a company called Fair Isaac in the U.S. But it is basically a number that's used to represent your credit risk, which is the likelihood that you'll repay a loan. It's not dissimilar to a grade in school. So the range in the scores. This is a number. It's from 300 to 900. 900 would be an A++.
A+++.
That's about as good as it gets, and very few people, less than 2% of the population.
That would be the black American Express card that people can get.
No doubt. No doubt at all.
And a 300?
A 300 means that that person, it's an F that's going to basically cause you a lot of difficulty in going out there to borrow.
Yes. So back to the question on how do you find out what your credit score is. You can go to either one of those websites. Can you request your credit score for free, or is there a payment associated with having to get a credit score?
I think what you'll find out there is people will be on the web and they'll see get your free credit report, this and that. You're not going to get your credit score for free though.
Right.
You're going to have to pay for that.
You're going to have to pay for that.
Yeah.
But I know you can go to Equifax or TransUnion on their website, put in your personal information, and obviously you'd probably need a MasterCard or Visa or something like that for a payment to go through. But I think it's like $30 or $40. Don't correct.
Yeah, I mean, I encourage everybody to go check for themselves.
Yes.
There's different packages you can buy where you can actually access it more than once over the course of 3 months.
And sorry.
No, go ahead.
And what I was going to say is, from an inquiry standpoint, is if you do it yourself, it does not reflect as a negative inquiry on your score. Like if you, for example, someone wants to apply and have a Capital One MasterCard, you're going to make an inquiry, and that score will drop a little bit because they just had an inquiry. But if you do it yourself, it does not reflect that, correct?
That's correct, James. Any self-inquiries don't impact it at all. It's only when an institution inquires. And to be clear, if somebody hasn't applied for credit in a while and they want to apply to a new MasterCard, for a new Aspire card, it's not going to ding your credit rating. It's when you do it repeatedly over short periods of time. Right? Yes.
And also with today, another point based on the inquiries, because many customers that we deal with are saying, well, geez, if I go to the bank and an inquiry's made, it's going to lower my score, and I don't want to do that. I went to a couple of places and they've lowered my score. Banks really understand that if an inquiry is made in today's society, more an economic financial state, more than likely that customer is going to go to maybe 2, 3, maybe even 4 places if they're looking for a mortgage. They're not going to go to one place, get an inquiry, get a credit report, do an application, and then just go with that one institution. They're going to go 2 or 3 places, and banks are very, very aware of that. So it's not that you're a so-called credit seeker, which is negative, because if obviously you're going out there and you go to 6 or 7 different places, well, more than likely you're going to 6 or 7 different places because no one's approving you, because we've got a problem with your credit score, and we would need to correct that. But if you're just going to go 2 or 3 times, I think banks are very, very cognizant of the fact that people have to shop and want to shop for a better deal. And there's nothing wrong with that, and that will not be impactful enough to not lend you the funds in
That's
the end.
exactly right, James. It just made me think of another point too. And we have some of the best privacy laws in the world here in Canada, and nobody can inquire on your credit bureau without your permission. So anytime
Right.
that you apply for something, you have to give permission to an institution to inquire on your credit.
Excellent.
Right.
Great
And I think that's another important note. Whenever you're online and you're researching financial products, you're making an application for a particular financial product, those companies have to disclose if they're going to
Yeah.
pull your bureau score, and they have to get your permission. So it's very, very important for people to make sure you're reading those click boxes, right? So the
Yes.
click boxes are there for a reason.
Yes.
Before you just hit yes when you're going through some sort of online application, please read what it is that you're agreeing to, because if it's going to be a hit on your bureau, it's important for you to recognize what the impact of that is repeatedly over
Yes.
time. Yeah.
What it really impacts, what are some of the significant points that if I'm going to apply for a Capital One MasterCard, what points would you be looking at that obviously affect the credit score and affect whether or not you're going to approve this potential client?
Yeah, let's go through a list of that. And to be clear, there are the scores that both Equifax and TransUnion issue, and then all lenders have kind of proprietary models they use to develop their own credit score. But some of the key points are your payment history. So, for example, do you ever carry over a balance on your credit card from month to month? Have you ever missed a payment on any of the debts?
Never.
Good man. Any collection or bankruptcy recorded against you? I mean, if the collection agency has had to collect an unpaid bill from you, have you been bankrupt? That's going to be there, and that's going to go into your score and contribute to it. Outstanding debts, what's the limit on your credit card? Is your spending close to your credit limit? Your account history, so how long have you had credit? So, if you're new, you're going to be considered higher risk, but you're developing. That's why it's so important to be on top of paying your bills on time. If you've been around for a long time and you've got a solid, long history of always repaying your debts and no judgments or decisions, you're going to have a pretty good score, a really good score, and you'll never have an issue getting credit. The number of recent inquiries, which we talked about, and the type of credit you're using. So, there's credit cards, there's installment loans, there's mortgages, there's
Yes.
that's a good point actually. Mortgages don't actually show up on your thing,
That's
but
right.
revolving debt as a line of credit could. So, and usually would if it's an unsecured line of credit. So all those factors contribute to it. I mean, they have different weightings, so there's no way to go in and
Right.
say this is 10% this and 10% this and all that. But all these contribute to it. It's most important that you just really pay attention to your bills every month.
So when we come back, we're going to take a short, quick break. When we come back, I'd like to maybe go over some of those points about, collection. If you're in collection, how to get rid of it, maybe what you need to do about it, because it definitely is more of a significant negative impact on your credit score. And it might not even be a collection of just for $50. It could be $5,000, but even a $50 or $100 collection is not a very good thing. Correct?
Right, that's correct.
So let's talk about that when we get back. So Michael, anything you want to add just before we go for a quick break?
No, I think let's go for a quick break and jump right back into it. We should probably let people know what the call-in number is. Anyone has
Yes.
questions?
Yes, the call-in number. Any questions? 416-870-1050. Or if you're out of town, it's 1-866-444-8326. We'll be right back. The Finance Hour with Michael Garrity and James Clever. And
About financial empowerment. We'll
just
be
gonna
right
mention
back on CP24 Radio 1050.
Great stuff. Great content.